Well, a couple of very key points as far as what Chris Wood of Jefferies is telling his clients in his weekly newsletter, The Greed and Fear, much awaited and much followed newsletter. Most important trait that he is saying at this point of time is that he continues to believe the Chinese markets, and he's talking about the Chinese currency, he's talking about Chinese bonds as well as Chinese equities, and he is a buyer of all three of these instruments. In fact, what he is saying is that one of the important trades would be to sell the dollar and buy the renminbi. The other thing that he is saying is that as far as China equities are concerned, he continues to be quite positive over there as well. But very importantly, in this particular edition of the weekly newsletter, what he is saying is that he's actually talking about India, and he's talking about how it's quite interesting that despite so much of economic disparity, despite the fact that there seems to be so much of worries regarding the GDP data, in fact he calls the GDP fall quite historic and significantly negative, and he continues to remain on the stance that as far as the GDP is concerned, it's simply due to the lockdown that we've seen so much of a negativity and so much of a fall as far as GDP is concerned. The 24% GDP is, according to him, as bad as anything Greed and Fear has ever seen. He's also talking about the decline as far as the real gross fixed capital formation is concerned to be quite gobsmacking. In fact, what he is saying at this point of time is that it's quite surprising that despite all of this data, Indian Prime Minister Narendra Modi continues to remain quite popular, and he believes that this shows how much of political acumen he actually has. And also what he is saying is that the good news as far as the second quarter is concerned is that the negative data, the GDP data, is something that actually must surely mark the bottom. And he also believes that the economic recovery tracker that Jefferies actually tracks now is operating at almost 89% of pre-COVID levels, which significantly indicates that recovery is quickly back on track. However, he is worried that the lack of room fiscally to ease is further aggravated by the constraint as far as monetary policy is concerned, and on the back of this, this is something that he is quite cautious about. He was also taking note of the fact that the central bank has stopped intervening in the currency market of late to actually restrain inflation pressures, and the rupee has actually appreciated by close to 4.7% against the US dollar since late April. However, he is talking about real estate stocks, and he's also talking about the fact that the kind of economic fall, that economic pressures that the economy is seeing, he believes that this actually provides an opportunity for long-term investors to be interested in India. He believes that the critical issue in the next 12 to 18 months is the kind of extent of damage that that the economy has gone through, and he believes that auto-related and real estate plays are the ones that he would actually rather focus on. Greed and Fear has both Maruti as well as DLF in the Asia excluding Japan portfolio, long only portfolio, and he believes that the state of Maharashtra that has cut the stamp duty is quite positive, and he believes that that could trigger a certain amount of demand revival.